Jeff, Christian, thanks so much for joining me here at the PDAC 2018. With these no steel break here for Mexico and Canada, what could this mean for base metal prices?
It's really too hard to tell at this point what's going to happen. It's going to be very telling this week to see if the U.S. government actually proceeds with tariffs. I mean, if the U.S. government doesn't, it's just another really big stumble for the Trump administration, which is good for gold and probably actually good for base metals too. If they do proceed, it's too early to tell. I think that what you'll see is that there'll probably be very little impact for base metals due to the trade, any initial tariffs that the U.S. government does. If we develop into a full-blown trade war, then it becomes sloppier. And quite frankly, I think that base metals may suffer a little bit.
Okay, switching gears now, let's look at gold. Since the last time we spoke, we're seeing stronger employment numbers, inflation creeping in here. There's now talk of possibly 5 rate hikes this year. What does the landscape look like for you?
Well, I think the landscape is that we're in a transition period in the way investors look at the world. And you're seeing with the increased volatility and the downside on the stock market and the increased volatility and upside in interest rates, that you're seeing investors transitioning from this long period of low interest rates, steady stock market increase and low volatility, which was reflected in relatively weak gold prices, to a more normalized financial market with increased volatility and increased downside risk in stocks, increased volatility and upside risk in interest rates, and consequently probably increased volatility and upside benefits for gold. Because I think that even with higher interest rates, you'll see higher gold prices because the higher interest rates will be more negative for the global economy, the U.S. economy, and the stock market than they will be for gold.
Jeff, the investor interest is just not there right now for gold. Is it really just a matter of getting a price rally going here? People are not excited about 1,300.
Well, I think it depends on, I would take exception with the idea that the investor interest is not there. We're actually seeing pockets of very strong interest in gold, physical gold, as well as futures and options.
From Europe?
From Europe, from North America, from China, from the Gulf region, from South Asia. Not so much South Asia, but from other places. There actually is a lot of demand. There isn't demand for gold coins right now.
Right.
And those are the fear guys, oh my God, the world's going to fall and Hillary's going to make us use the same bathrooms and stuff like that. Those guys are buying fewer coins. But if you look at ETFs, futures, options, and other things, you're seeing investors buying gold predicated on the idea that gold prices will rise later. Not now, but later. So the guys who are sitting around saying, geez, 1,300 doesn't look good, Wally, I think it's got to go, I thought it was going to go to 3,000 or 10,000, they're going to be wrong. And they're disillusioned. But the people who are more realistic and saying, okay, 1,300 actually is a good price and it could go to 15, 16, 18, 2,000 over the next 5 to 7 years, more realistic view of how the gold market really works, those people are actually coming back into the gold market over the last 18, 24 months. And that's really what's been supporting the price and probably will drive the price higher later.
What about on the silver front? Are you sticking, I know you were talking $38, $40 silver. We're still struggling to hit 20 here. Gold-silver ratio has crossed 80 now, though. So what does this mean for you?
Well, first off, we said $30 or $40 silver 7 or 8 years from now. I gotta say that, because there are people who, when we said that in the distant past, said, oh, you were wrong. I said, no, we said, many years from now. So we still are holding by that because the dynamics are there. Investment demand is down. The silver market, the silver industry is not doing a good job. The silver industry is not doing a job marketing silver to investors. And one of the things...
Do you mean by that silver miners?
Yes.
Okay.
What you're seeing is investors are focusing on gold and not silver. And there's a natural proclivity toward, a preference toward gold over silver on a global basis among investors. But the silver industry is not promoting silver to investors, and investors are not buying as much as they were. They are buying a lot more than a lot of people think, but it is down. Again, you have the fear trade coin buyers going away from the market for now, but you have other people looking at it. But it's a longer term play.
But Jeff, what could the silver miners be doing more of?
It's a very complicated answer. I don't know that you have enough time, but one of the problems that a lot of investors have with silver is there's so much bad information out there that the silver industry, with the exception of 4 or 5 years, 25 years ago, the silver industry has never really focused on trying to get quality, reliable information and analysis out to mainstream investors. They've never reached out to banks and brokers. They've never really reached out to mainstream investors, and they've let the public discourse about silver be defined by people who don't know what they're talking about, who slosh back and forth about a lot of things that most reasonable investors listen to and say, this market is so poorly informed, I'm just not going to get involved in it.
All right. Jeff Christian, thanks so much for your thoughts today.
Okay, you're welcome.
And thanks for watching. We'll have much more for you from the PDAC 2018.